Good afternoon, everyone. Thanks for joining our webinar on unlocking the latest government funding. I'm Matt Hunter. I'm the Innovation Product Marketing Manager at Konica Minolta Australia. And today in this webinar, we wanted to, give you a bit of an overview of what's been announced in the federal government budget, where you might be able to access a bit of information and how it might apply to you, some best practices, and maybe some finance products that you might be able to take advantage of to assist. Please feel free in submitting questions in the Q&A window. We are going to record the session today, so if you have to drop off early, I'm sure there'll be some really interesting Friday evening watching for you to watch the rest of it. Let me today introduce the two speakers we've got to talk about this subject. So joining me today, we have Tim Naylor. Tim is currently the ANZ Senior Channel Manager for 3D Systems. They're a 3D printing technology company. He's previously held roles in startup companies, KPMG in particular, KPMG R&D Tax and Government Grants Department. So obviously a wealth of knowledge there for us to tap into. Also on the call, we have Brian Swan, who's a director at 3 Advantage. He spent time at Macquarie Bank and Rabobank, and is one of the 3 partners of 3 Advantage. And obviously what they do is assist people in equipment leasing, and they're a finance provider. So really great to talk about instant asset write-off and products you might be able to use there. So what we're going to cover today, just really high level, obviously the modern manufacturing initiative, grant application best practices, and that's an interesting one from the perspective of, what you need to do to be successful in grant writing, and of course research and development tax, and then the instant asset write-off. So without further ado, I might hand over to our first speaker, which is Tim Naylor. Thanks for joining us, Tim.
Thanks, Matt, and good afternoon, everyone. So, first of all, I just wanted to cover the Manufacturing Modernisation Initiative and explain a little bit about what that is, and I guess the vision that the government announced on the 1st of October, and its plan to help the manufacturing industry forward for the next decade. So the government announced a $1.5 billion investment in Australian manufacturing over the next 3 to 5 years. The program is still being developed and designed, but there's some initial structure to it, and some intended subsectors that it will apply to. So broadly, there will be 3 MMI co-funding targeted streams, and they'll be targeting investment in 6 national manufacturing priorities, including resource and technology, food and beverage, medical products, recycling and clean energy, defence and space. So if you're listening today and your company or business is in any of those priority sectors, well then good news is that the government it has offered to lend a bit of a helping hand and provide some funding and support going into the future. So if you go to the next slide, Matt. So I just want to talk briefly about the 3 different streams and the intent for each funding stream. Again, it's a broad map at the moment. It's the specifics for the individual streams have not been released in their entirety. But broadly, there's going to be a collaboration stream, a translation stream, and an integration stream. So the collaboration stream, that's going to be targeting joint venture projects, or what the government terms networked projects. So really JV projects into a project that builds competitiveness or productivity and benefits each of the individual members in the network or the co-op. And the funding is going to be a co-investment from the government, up to 1/3 of eligible project costs. capped at $1 million. And the intended opening date is first half of 2021. And so it's really a funding stream that's, if you do have a project where you think you might be in a joint venture, either with a research institution or another business, where broadly speaking, you're going to be increasing competitiveness, productivity, and it's going to benefit everyone in the network. This is the type of project where you should look and see whether this collaboration stream may apply, and see whether there's any funding available. The other two streams that are two, where the details and the criteria is still to be designed and released, is the translation stream. That's the intent of the translation stream is to target the commercialization of ideas into outcomes, and to provide funding for researchers to be placed in business. So the initial design, or some of the initial details that I've seen, is there'll be a cap or a lump sum payment for any businesses that want to take on researchers to put them into their organisation to research new manufacturing technologies, or engage in some form of R&D. And there will be project funding in that stream, and the initial detail is that it will be a co-investment up to 50% of the project costs, a two-tier application process, where the initial interest to apply will be released, or the expression of interest to apply will be released on the 1st of March in 2021. And then finally, the integration stream, which is designed to help manufacturers participate in domestic and global supply chains. There's not a lot of detail on that stream at the moment, but the funding, or the highlighted funding, is another co-investment up to 50% of eligible project costs. So because of the Manufacturing Modernisation Initiative, it's still a broad brush, or a broad policy, with the details to be released early next year. I thought I'd also look at some of the short-term grant opportunities that are available, two of which, the $52 million Manufacturing Modernisation Round 2 is intended to be released next week. The Sovereign Industrial Capability Priority Grant, which is actually open currently, and the $107 million Supply Chain Resilience Grant, which will be released next year. So the $52 million Manufacturing Modernisation Grant, that is targeting capital investment. So if you go to the next slide, Matt. So that this particular grant, which will open, it's scheduled to open on December 7th. That's targeting small and medium enterprises with staff below 200 employees. It's a large-scale grant, ranging between $100,000 and $1 million in funding on a 3-to-1 funding basis. So that means that the government will fund 25% of an eligible project, with a minimum spend of $400,000. So the grant can be used for buying, constructing, commissioning, capital equipment, fit out, process design, and software integration. And it's the criteria for that grant is that you need to be able to show, and a key one is expected job growth as a result of the investment, the upskilling of the existing employees, and alignment with the national manufacturing priorities, or the 6 sectors that were identified previously. But a key grant, or a key part of the criteria is expected job growth. So if you do have a project, or if you're planning to purchase equipment, and you meet some of these criteria, if you're a small and medium enterprise below 200, you're going to be spending $400,000. on a project involving some sort of transformative technology or a new capital equipment investment, and you can link or show some job growth, well, then this is the grant to apply to. There is a link below with the address. You can just type into Google Manufacturing Modernisation Fund Round 2 and the link will come up. That opens very soon. I'm not sure, 100% sure when it closes, but normally they last, they don't last for that long. And so if you do have a project that where you feel where you can meet the criteria for the grant, get in quick. So next slide. So the next one is that I wanted to cover. This is specifically for any defence companies that are in the defence sector, and this is a very generous grant. It's actually probably one of the most generous I've seen. It's targeting Australian businesses that will build industrial capabilities that fit within Defence's sovereign industrial capability priorities. So I'll go into those defence priorities on the next slide, but it's a very generous grant funding up to 70% of the project costs. And the funding covers, similar to the Modern Manufacturing Initiative, covers buying, leasing, constructing, installing and the commissioning of capital equipment, including software and costs associated with enhancing the company's cyber security or defence compliance with security. The grant's open and it's open on an ongoing basis. So if you do have any projects where, again, you're meeting any of these criterias, it's definitely something. It's definitely something that the defence sector or the government is looking to really promote and help companies fund their projects in this space. And if you go to the next slide, the industrial capability priorities are the following. So if you do plan on spending any capital investment that is somehow related to enhancing Australia's industrial sovereign capability in any of these segments, then this is definitely the grant to really look at. The government's really supportive of this. They're not trying to knock companies out or prevent them from applying where they actually meet the criteria. If you meet the criteria, it covers 70% of the project costs. Very generous. And then the last one, the next grant, if you go to the next slide, Matt. So this is just another one. It doesn't open till next year, but it's a $107 million supply chain resilience initiative. And so this grant is targeting supply chain vulnerabilities for critical products or inputs. So obviously things like face masks or any other medical product or any other products that have a supply chain vulnerability. The intent is to fund projects that will expand production or capability locally for those products. Guidelines will be made available in the first half of 2021. And so if there's any projects that you feel will address a supply chain vulnerability, then definitely have a look at this, the supply chain resilience grant. So just quickly, in terms of grant application best practices, a lot of grant application writing is about addressing all the criteria in the grant application clearly. May sound like a really simple thing, but a lot of grants fall over when not all of the criteria within the grant is not addressed. So if anyone's ever written a grant application, there's sometimes there's a lot of criteria and there's a lot of repetition. And sometimes when you're writing it, you feel like you're addressing the same point over and over again. and it's understandable why you may feel that you've answered all the questions, and then but the way grants generally are assessed, it's very bureaucratic. They'll look at whether you've met all the criteria in the grant, and they'll literally have a checkbox or a checklist to see whether you've met all the criteria. So if you fail to answer one of the criteria or points, that can be the basis on which to exclude you. So it's a really simple thing, but it tends to be the most common reason why people aren't successful with grants. They're just not answering clearly or adequately all the questions in the grant application. Be very clear about the level of job creation and any target outcomes. Be specific. Assessors will want to know precisely how many jobs are created, not sort of vague statements. Provide evidence where required. If you can provide evidence or letters from notable suppliers about a product or notable customers. They tend to be the best forms of evidence. If you get a letter from a major manufacturer or a major well-known company stating their intent to buy a product off you, things such as that provide good evidence to the government that you're serious about the project, and I guess it has legs and it's compelling. Tell a compelling story. You at the end of the day, you're really selling the project and the story to the government. So you've got to try and tell a really compelling story about the business and how ultimately the project is going to enhance the company and the company's competitiveness and obviously lead to increased employment outcomes. Another trick is to contact the grant program managers where you can, if they're listed online. That's a really handy trick because sometimes you can bounce your project off the grant program manager or assessor, and they can give you some instantaneous feedback on whether your grant application or whether your project has legs. And it also makes it puts you on their radar. And I've actually had grants where we haven't answered all the criteria in the grant application, and we've had a grant program manager contact us and go, "Hey, you haven't answered this question properly. Please resubmit it." And that wouldn't have happened if we didn't try and form a relationship with the grant program manager. And if you go to the next slide, Matt. So just briefly, I wanted to also talk about the R&D tax incentive, which is another industry support program. It's broad-based. You don't have to be in any of the national manufacturing priority subsectors. It's a broad-based industry subsidy. It's different from a grant in the sense that it's actually more of a retrospective program. It's a self-assessment system that asks companies to look at their activities that they've undertaken over the financial year period and assess whether any of those activities that they've undertaken complies with the R&D tax incentive rules in terms of the project eligibility. So it's self-assessment. You submit an application to AusIndustry, which is basically a project description or a description of how the project complies with the rules, which I'll go through in a second. And then the expenditure associated with the project is submitted with the company tax return. So it's a self-assessment system. You're not relying on, I guess, assessors to approve it at the initial stage. There is an audit process, however, for the R&D tax incentive. About 10% of companies get audited. And the benefit for a small company, so if you have an eligible project and you're a small company with an aggregated turnover below 20 million, the benefit is it's a 43.5% refundable tax offset. So what that means is if you're a small company, turnover below 20 million, and you spend $100,000 on eligible R&D expenditure, and your company is also in tax losses for that financial year, you'll effectively get a cash refund of $43,500 associated with the project expenditure after the tax return lodgement. And if your company's profitable, it'll reduce your tax payable. There also, I'll quickly mention, there also is a tier for companies who have a turnover above 20 million, but the benefit is nowhere near as generous. It's only 8.5 cents on the dollar, and there's some new rules and complexities with companies for the benefit for companies above 20 million. But there is a program available for companies above 20 million. It's just not as generous. And then look, finally, the eligible expenses for an R&D project can include salary and wages, overhead, plant depreciation, and contractor and materials that have been incurred in relation to the project's eligible R&D activities. So if you go to the next slide, Matt. So how do projects qualify? You have to be developing a new or improved product, process, materials, device, or software. And crucially, the project has to contain experimentation. So an experiment has to be undertaken that tests a hypothesis and overcomes a knowledge gap. So there must be some form of activity within that project that meets the definition of an experiment, or technically they call it a core activity. And look, you can also claim the supporting activities, so all the background research and project management that has to be undertaken to support the project experimentation. And finally, records must be kept in the event of an audit. The AusIndustry, who regulates project eligibility, they will ask for records that the activities have in fact been undertaken. Next slide. Sorry, Matt. And so just quickly, for the 30 June 2020 income year, that's if you're a 30 June year end, your R&D tax application has to be submitted to AusIndustry by the 30th of April 2021. Your expenditure claimable is submitted with your company tax return. Nearly everybody uses an advisor to prepare the application and identify expenses claimable. And approximately 13,000 companies in Australia claim manually, with the majority of projects actually being software projects. Software is a little bit tighter in terms of the eligibility. Software projects tend to get audited more because the authorities are a little bit more skeptical about the eligibility of software projects. That's the overview of the R&D tax incentive and government grants, and I'll hand over to Brian.
Thanks, Tim. Very informative, and thank you for taking the time and explaining that in detail. And also thank you, Matt, for inviting me here to touch on things from my point of view and how it relates to financing availability. I've just got a couple of slides here, guys, but quite important to focus on a few things. That I was asked to talk to one of the most recent government stimuli, which is largely an extension or enhancement of the instant asset write-off, as you can see there in the heading. On the 6th of October, as part of the budget, the government announced that it's going to target support to businesses and encourage new investment effectively, in part through a temporary full expensing incentive, which is known as the Job Maker Plan. That was their phrase for it. There's been a few stimulus and a few little marketing phrases put to certain things, but Job Maker Plan is what they're calling it. As you would imagine, it's a really good one to stimulate the economy, and it was given widespread support by all parties. And some of these things take a while to go through Parliament. This one went through very quickly. and is now legislated and is now law. Eligible businesses with an aggregated turnover of less than $5 billion or up to $5 billion can now deduct the full cost of new eligible depreciating assets that are first held and first used or installed for a taxable purpose between the 6th of October, which was the budget date, and the 30th of June 2022. The first bullet point there, it says new assets, and then there's an asterisk that points to the bottom of this slide. For small and medium businesses, I've always had a bit of a laugh at this. They class as small and medium businesses as aggregate turnover of less than $50 million, which is quite interesting. Full expensing also applies to eligible second-hand assets. Now, you'll notice right at the outset in that sort of opening comments, I've probably said the word eligible more than a couple of times. And again, I don't want to go right to the bottom of the slide, but I have to stress that there is a lot of eligibility criteria, and we are certainly not at 3E, and myself are certainly not tax advisors or accountants, and you absolutely have to talk to your tax advisors and accountants to see, first of all, eligibility criteria. But I'll talk to the instant asset write-off or the job maker plan at a higher level today. The second bullet point there is as to what it is, no limit on individual asset costs. As most of you are probably aware, it was 150,000 under the instant asset write-off per individual asset. Now there's no limit at all, so that's a really, really good enhancement. I talked about the 5 billion already as to who's eligible for it. The instant asset write-off, although it had a couple of iterations, it was up to 500 million turnover. There's not many companies in Australia that have turnover over 5 billion, so it's giving the vast majority of businesses in Australia the ability to take advantage of this job maker plan extended instant asset write-off. And again, the timing is the instant asset write-off was due to finish in June 21. This has now been extended to June 22, which is terrific again. We have there's lots of information on this. We as a company, and for those of you who don't know us, we're Konica Minolta's finance partner. So we are an external source to Konica Minolta. We do have some information available on the resource that you can see at the link there, and I'd encourage you to have a look at that if you've got any queries or you want to dive a bit deeper on that. And there's also some other good links within that site to other relevant topics on this subject matter. The next slide, Matt, please. This just talks largely to the benefits, folks. I've got we have to be clear, and I'm very wary of people's knowledge that may be different on what we do and what we don't do. The majority of what we do as a company is rental or lease, and with a rental or lease product, we, the finance company, own the asset. With our the tool that we use to take advantage for eligible parties in relation to this stimuli is what we call our instalment purchase agreement. Some of you might have heard of a chattel mortgage previously, and there's various different names for it. But ultimately, the instalment purchase agreement gives the client ownership from the outset. And without the capital outlay is the one big thing. We often get told we don't lease from clients, that our policy is that we don't lease and we don't rent. Well, this is not a lease or a rental. Other things that come up of when we speak to procurement people, I might have a budget of $50,000, but the solution's $200,000, so I'm not going to commit to that now. Well, yes, if your budget is $50,000 per annum, we can give you that. We can just stretch the payments out over a 4 or 5 year period, and something that you thought might not have been, you might not have been able to fit within your budget can now be fitted within that budget. So that's a key benefit that sometimes gets overlooked on the instalment purchase agreement. They get absolutely have ownership from the outset, and as such, they can claim the depreciation on those assets. The one across to the right is fixed payments throughout the term. Again, there's lots of people that throw out lots of different things from time to time, and this is perhaps what most people would do is fix the payments, but it does give the client, again, budget certainty. It's absolute budget certainty, which is very important for CFOs, financial controllers, etc. You reduce this use tax and increase cash flow. That's effectively what the stimulus does. It allows you to fully depreciate an asset that you wouldn't have previously, and thereby reducing the amount of tax you pay this year, and thereby increasing the cash flow to the business, which is, again, it's a short-term benefit, but it's a really important benefit, especially as we go through the COVID times that we've had recently and we get out of them. Cash has always been king for businesses, but never more so than it is now. One of the unique points of is the last bullet point to the right-hand side there. We can also fund the GST. Now, we often overlook this. We do a lot of software for Konica Minolta and for other parties. We can fund the GST inclusive amount. Now, that benefit to the customer is normally, if they were purchasing something outright, they would pay the GST up front, all of the GST, the 10%, and claim it back at their next BAS. They can still claim the GST back at their next BAS if they fund it through an instalment purchase agreement. But if they've funded it, they've not outlaid all the GST up front. Hopefully that makes sense. It's a nice little cash flow benefit, again, to the business. And again, most of what I've talked about in the last 5 minutes or so has been to improve customers' cash flow, which is vitally important at this moment in time. So that's high level from us. It was a very short and sharp in comparison to Tim's stuff, which was really, really good, actually. I really enjoyed that. More than happy to take any questions now, Matt, or obviously to receive any questions electronically or whatever. But I'll pass it back to you now, Matt. And
yeah, no, thanks.
Anything you want to raise.
Thanks, Brian, and thanks, Tim, as well. So a couple of questions, and I might kick off with you, Tim, if that's all right. Obviously, thinking about our audience, and obviously we've got a few manufacturers on the other end here, and a question: how do you see 3D printing fitting into the MMI? Is it collaboration, translation, or integration? Or it could be all of those things, right?
Look, it could be all of those things. I mean, it's hard to assess until we see the detailed eligibility criteria for all those three streams. But for the collaboration stream, I mean, I guess if you are working with a research organization and are looking at implementing 3D printing in your particular process to improve competitiveness or productivity, or produce an advanced product utilizing 3D printing, then I could see how a 3D printing project could fit in that collaboration stream quite easily. And really, in all those three streams, whether you want to take a researcher on from a university or an organization that specializes in 3D printing. So yeah, look, 100%. You could 3D printing would definitely fit in some of those collaboration streams in that modern manufacturing initiative program, and also in the $50 million fund that opens next week, which is the round 2 version of that program. In that first round, there were quite a lot of companies who were awarded grants who had a 3D printing themed project, and that's all publicly available, so you can go online and look at the applicants, or the successful applicants of the first round of the Manufacturing Modernisation Initiative, and you can see what the type of companies and their projects that were awarded.
Yeah, so just a follow-up question, and probably this one might be more for me, but you talk about having a researcher involved. Does that person need to be a qualified researcher, or could it be somebody that's already existing within your organisation that you're tasking with, coming up with the findings?
The devil will be in the detail of the grant criteria. Normally, they're fairly comprehensive.
Yep.
and it's impossible to answer without the detailed criteria being released. But I would have thought they'd be trying to target external researchers, and I think the overall intent is to promote greater collaboration between companies and universities.
Yeah. Okay, great. Thanks, Tim. Now let's have a look here. Brian, what's an example of something that might be eligible for R&D? What's an example of? Sorry, Tim, this would be for you. What's an example of a piece of equipment that might be eligible for R&D tax? Could it be a 3D printer? Could it be a robot? Could it be just a normal printer?
Absolutely. I mean, it doesn't. Again, the R&D tax incentive is designed. It's not designed to really be that or to have too many value judgments in what's eligible and what's not. It's a bit restrictive with software, but really, if you're developing a new or improved product, process, device, or software, and you're utilizing, it could be a 3D printer, it could be a CNC machine, it could be a regular 2D printer. But if you have a project that meets that eligibility requirement, and you're taking some trialing and experimentation, then that would be the type of activity or project that should trigger at least a look at whether the project will fit the wider eligibility criteria. So quite common with 3D printing, people use 3D printing and rapid prototyping in new product development. So companies will, if they're developing a new product, they'll make lots and lots of new different prototypes using a 3D printer. And if there is experimentation at some point in that new product development, well, then that would be the kind of activity that you would look at that would be suited to being eligible with respect to the criteria. And you could claim things such as, well, the salary and wage time of engineers or product developers, the depreciation of the 3D printer, or a proportion of it as related to the time spent on the project. There's overheads that can be included, materials. So it's really about identifying, looking at seeing whether you've got a project that has that either developing new or improved product, process, or device, and there's a form of experimentation in that project. And that's when that should be the trigger for looking into this further and speaking with an advisor and investigating a little bit further as to whether you meet the criteria.
Great, thanks, Tim. I guess I'm going to try some of the question at you, Brian, and I guess from a 3D perspective, you guys have, I guess, a finance product that helps with the instant asset write-off.
Yeah.
And I know that you, I guess, finance or use this product across more products than just the sort of products that Konica Minolta would offer. But what's an example of, I guess, things that people are using that finance product for to take advantage of the instant asset write-off? Are they would a 3D printer be eligible for it? Would a robot? Would a photocopier or a multifunction device?
Yeah, a similar answer to Tim, Matt. The type of asset is kind of, I would say, a very high percentage of assets are eligible.
Yes, okay.
Hard assets. The software thing is a very interesting discussion, and when you look at the if you need to get to sleep early one night, if you look at the ATO website on this issue and you talk to you look for software advice, it's a little bit grey, to be honest with you.
Yeah.
My understanding is that developmental software is not part of it, but off-the-shelf software can be. But again, I stress that's just my understanding. And again, you should absolutely talk to your own tax advisors. But we do a lot of standalone software, Matt, as you know. We finance a lot of that stuff. Whether the clients that we have taken advantage of the instant asset write-off is an interesting question. But
Yeah.
my understanding is that if it's developmental software, that's out. But off-the-shelf software is in. But again, that's just my personal understanding.
Yeah, great. Look, I guess thank you, gentlemen, for your time today. Really appreciate it. Some food for thought there, and I guess for those of you out there that have joined us today and are listening in and want more information, obviously they'll be recording this. There's a few interesting links within the presentation that'll help you access a little bit more information. As Brian and both Tim have reiterated during their during their part of the presentations, it's worthwhile talking to your tax advisor. They're the ones that are ultimately going to help you and give you advice. Obviously, if you're looking for more information, you want to contact us, we can help point you in the right direction. So with that, I'm going to close off and say thank you to everybody for joining us. Thanks, Brian. Thanks, Tim. We'll look forward to seeing you on the next webinar. Thanks a lot.
Thanks, Matt. Pleasure. Thanks,
Bye.
everyone.